Have you ever wondered how you can retire on Tesla stock in a couple of years? Today, many people believe that they can retire early by investing in the leading EV companies' stocks. You definitely would not want to miss this one. People put their hard-earned money on lucrative investments for varying reasons. But most often than not, people do it to attain financial freedom. Becoming a stock market millionaire may be considered a lofty goal, and although it's something not everyone will be able to achieve, it isn't entirely impossible. By investing consistently, choosing the right investments, and keeping your money in the market for as long as possible, you have a better chance of generating long-term wealth. Investing in the stock market is one of the world's best ways to generate wealth. One of the major strengths of the stock market is that there are so many ways to profit from it. However, with the great potential reward also comes great risk. Now, the question is, why invest in Tesla stock among all valuable stocks in the stock market? Well, Tesla is not just a car company. That statement may soon get old with a lot of experts saying that, but it's true. Aside from being a car company, Tesla is also a utility energy, artificial intelligence, life-saving robotics, and manufacturing company that is well on its way to disrupting the biggest industries. In fact, many are confident that in just a few years, Tesla will be the biggest company in the world. Although that may be quite a stretch for some. It comes as no surprise that most Tesla enthusiasts usually provide their own projection models for the company's stocks. One of them is a YouTube content creator named Ken, who retired at the young age of 38. His bio states, "From employee to running a few companies, I tried it all. Investing in stocks and buying the right stocks brought me to retirement. My goal, my love, my passion is to inspire and help others achieve financial independence." In his channel, he talks about stocks to buy, disruptive stocks, multi-baggers, or generally anything to do with money, as well as breaks down complicated numbers. In his projections, taking into consideration the free cash flows, revenue growth, and addressable market, Tesla will be worth $4 trillion by 2030 in his base case scenario. His bull case scenario places a price tag of $10 trillion on Tesla by that time, which is probably why he mainly focused on a simple $4 trillion valuation. Accounting for share dilution, a $4,100 Tesla price target per share is attributed to his worst-case scenario. My bull case is $11,700 and bear case $4,100 per share, he said when discussing his Tesla projections for 2030. Most projections will take the midline, but I'm taking a price target of $6,900 nearer to my bear case, giving a higher margin of safety. He added, "My approach is a conservative approach to give a higher margin of safety." Financial independence, retire early, coined simply as FIRE, is a financial movement defined by frugality and extreme savings and investment. By saving up to 70% of their annual income, FIRE proponents aim to retire early and live off small withdrawals from their accumulated funds. The FIRE movement is a lifestyle movement to gain financial independence and retire early. The model became particularly popular among millennials in the 2010s, gaining traction through online communities via information shared in blogs, podcasts, and online discussion forums. This movement encourages people to live below their means, so they have more money to invest toward early retirement or part-time work. The higher your savings rate and the percentage of income you don't spend, the faster you can become work optional. However, for clarity, FIRE is not a dividend play. Most dividend stocks don't move up much or down. Investing in high-quality growth companies, the capital gains will surpass the dividends received. As your capital grows, you sell stocks to fund your daily life. For example, if you have $400,000 invested and your $400,000 grows at 8% a year, note that in this example 8% was considered to be benchmarked to the index with a further margin of safety. While your money grows, you withdraw what you need at $2,800 a month for 30 years. Because the invested capital keeps growing, at the end of 30 years, you still will have $201,000. On the other hand, if you decide to withdraw more, say $3,500 a month, you would have used up all your money in 18 years. Of course, people have varying needs and thus have different ways of life. And one's cost of living factors a great deal on how long the money will last after retiring early. Aside from one's lifestyle, one's place of residence is also of great concern. The cost of living differs in every country, and for the sake of computation, there is an added 40% extra cost of living to allow for a comfortable life, to use the term loosely. When a person retires, his cost of living drops. One will not have to spend as much on traveling and socializing, although it varies from person to person. But the bottom line is the cost of living drops when retired. Factor in that there will no longer be an income tax. In line with that, Tesla is a high-growth manufacturing and software company with a 40 to 60% annual growth rate currently. Experts believe that by the time Tesla matures, the growth rate should look like Apple's at about 20%, which is still considered very high. Again, note that in the following calculations, extreme levels of margin of safety were taken into consideration. That said, most retirement calculations take only 15 years. People usually work until the age of 65 and enjoy retirement until age 80, for calculation's sake. However, that is still too short, which is why people have been wanting to retire early to be able to enjoy the most out of life without having to work their backs off until the ripe age of 60. And that is how investing in stocks comes into the picture. As earlier mentioned, different cities have different costs of living. For the United States, United Kingdom, and Australia, the living cost is roughly the same. Approximately $375,000 is considered enough to live a very comfortable life. With $375 invested in Tesla stocks, there will be satisfactory returns of 8% a year with a $1,951 cost of living. Note that there is an extra 40% added for a comfortable way of life. With $375,000 invested and withdrawals of $2,731 a month every month for the next 30 years, you will have $30,726 by the end of 30 years. That translates to 54.34 Tesla shares needed at $6,900. Assuming the worst-case scenario, you'll need 91.46 shares of Tesla stock to retire very comfortably with a high margin of safety. Singapore is considered one of the most expensive cities in the world to live in, where houses are extremely expensive. To retire in Singapore, you'll need 60 Tesla shares or 100 Tesla shares, depending on how much you spend. Now, the cost of living in Germany, the Netherlands, Hong Kong, Sweden, and New Zealand may be considered to be in the same category as Canada. Living in Canada, $325,000 with an average annual return of 8%, cost of living $1,701 plus 40% is $2,381. You will be withdrawing $2,381 a month for the next 30 years. You will end up with $5,566. At $6,900 per share, you'll only need 47 shares or 79 shares if the stock price remains low in 2030. For other Asian countries, lesser Tesla shares are needed to retire early and enjoy the sun and the beaches. According to Ken, it is possible to retire on Tesla stock in this new era. Not only Tesla will survive, Tesla will thrive, he said. He also noted that there's risk in everything and that it's all about risk management. He said, and the risk of Tesla going to zero is close to none. Overall, based on the presented data, Tesla stock has the potential to make you rich and eventually allow you to retire in the near future instead of in the distant future. Still, nothing can be set in stone, as there are economic factors that may affect the company's stocks to either rise or fall. The great news is that Tesla shares will appreciate in value over time if the business remains strong, so your money won't run out for a long time. Investing in Tesla stock is probably the smartest idea at the moment for investors who want to retire early. Adam Jonas said that the company was a winner in the electric vehicle race. He said that the current landscape for electric vehicles was a race, and that Tesla was winning it. Think of the EV race as a marathon. He wrote, Tesla is in the lead at mile number 21. Everybody else is at mile 2 or still tying their shoes. Subscribe to this channel to find out more info on how to retire early with Tesla stock.